Have with me Patrick Nicolet from Capgemini. Thank you so much, Patrick, for speaking to us. My first question to you, there has been a lot of uncertainty around IT spending in 2016, and that seems to have had an overhang on 2017. What are your clients telling you as far as spending is concerned, IT spending is concerned, as we enter the year 2017?
So we should distinguish between what is linked to maintaining the current IT systems, and the pressure on the cost and the budget remains and will remain and has been here for a while. And then there are the other part of the spend in technology, which is about notably everything that is related to digital, and this is growing and continue to grow. Will it balance overall? To be seen. It really depends on the maturity by clients, the agenda of every client. But all in all, the combination of both still give us a good outlook for 17.
Okay. As far as the guidance is concerned, you've guided for a 3% growth for 2017, if I'm correct.
Yes,
yeah?
Absolutely.
Okay. So in terms of, if I had to purely see the numbers, the guidance that some other IT companies have given us is substantially higher. What is the reason for the fairly cautious guidance that has come in?
A guidance is a guidance, so I will not comment if it's cautious or not, but it is a guidance.
But is that because of the uncertainty that is there in the macroeconomic environment?
No, it is linked to our own portfolio mix. Okay. We have informed the market about notably a reduction in our engagement with the Custom and Tax Authority in the UK. So we have some effects, and this is also linked to the year-on-year comparison. So we did a significant acquisition with iGate, so it has an impact, and all these things are normalizing. What is important to note is the growth in our digital and cloud portfolio. That is largely above 20%, and I think one should pay more attention on the rebalancing of the portfolio than the net-net.
Okay. So as we go forward, what are the uncertain factors or the macroeconomic factors that you're watchful for?
Oh, the macroeconomic, there are quite a few. I would start. One is, we believe we are at the end of a certain era of globalization. We see it. It has started a couple of years ago. I believe it is accelerated. There are some well-known factors, such as the Brexit or the announcement of the new U.S. administration, which goes into this direction. So this has an impact on our operating model, notably, and how we redefine our relevance locally. I think we are very well positioned for this challenge.
That has also contributed to the guidance as well.
In which way?
You know, in terms of the visibility that you have, the macroeconomic environment, you've kept these uncertainty points in mind while making the guidance.
Yes, as we should do. But I think we are well equipped, and we think we are well equipped to address those right now. But there are other challenges. Digital is changing the business models of most of our clients, ours as well. Automation is another aspect that is less macroeconomic, but still has a big impact. So there are quite a few challenges with which you have to play.
Okay. Let me ask you about the India business then. Half your headcount is from India. Now that the Trump administration has changed the game as far as visas are concerned, at least there are proposals that can be dampening. Would there be any change in your mix as far as hiring is concerned?
Well, our perspective is that first, the most adequate reaction to the visa is for landed resources in the US. So rather than bringing the people to the work, you might think and discuss with your client how you bring the work to the people. And that addresses the visa concern, because you don't need to lend resources. For the clients that will insist on having this might have an impact on the cost, because then you will have to recruit locally, and in this sense, we are also well positioned to address this part of the scenario, as we have a strong local presence in every geography where we operate.
Okay, fair enough. So let's get to the India aspect. What are the plans for India expansion? You've acquired iGate. Are there any assets that are attractive right now as far as acquisition within India is concerned?
So no, not acquisition. We just finished now, end of January, the formal integration. It has been successfully done. Now we have one Capgemini across all of India, for which reaches soon 100,000 colleagues of us. So we are very proud of this achievement. We have a very solid basis. While we've done this, we equipped India with infrastructure to support the group and leverage the potential of 100,000 people in one geography. One example is a pan-India resource management group and these kind of things. Now, the challenge for India and in our multicultural perspective is that we must build India as any other country that we have within the group. So it is about talent, it is about digital, where we will need to invest. So now starts a new phase of transformation.
Okay, so in terms of additional investment, in terms of creating more delivery centers in India, or in terms of headcount addition, what is the plan?
So we voluntarily capped our growth in order to be able to transform, because as I said earlier, the importance is the portfolio. There is a big demand for digital. We are totally convinced you can deliver, you can develop from India. So it's not about the volume game. You need to look at the qualitative aspects. So you must reserve space so that you offer to the talent here in India the opportunity to have the most exciting job. I would like to add also that India is a vibrant economy today, and this creates competition for us as well to attract the best people. There are a lot of opportunities available, luckily for all these people, but we have to face this challenge. So if we don't adapt, we become irrelevant, and it's not a good fate for any company.
All right. Thank you so much, Patrick, for speaking to CNBC TV. It's been a pleasure to have you with us.